Another video, tariffs. So we can go into more fundamental data. I'm going to pull up Forex Factory. I also have a document that I was working on as well for you guys to show you guys some of the polarities and also what can be considered a defect or some type of exposure for the U.S. economy due to the GDP that we have with China, and going forth with the tariff agreements and what the market's going to play out with, how the market is going to be affected by these tariffs, and if it's going to be a huge dynamic factor for moving for the rest of the year. So we're going to go into all that today, you guys. I'm also going to cover some BTC. I'm going to cover some Ethereum and some Ripple as well. Just some technical analysis for you guys, because we saw a bearish move to the downside, but I also put a buy decision for Bitcoin, and I'll also be doing a market health update later on today. So going straight into you guys. So I'm going to just pull up the document first off, and I'm going to show you guys a little bit of what I was talking about on the tariff agreement. So this is my analysis on tariff agreements. I got this from a couple of websites, and I'm just basically dissecting it and putting it into perception for you guys. So President Donald Trump will let tariffs on China goods worth up to $50 billion take effect after talks between two countries fail to with the White House demands of reducing huge U.S. trade deficits. Okay, so basically this is what we're talking about with the one-sided deal. Okay, so the U.S.-China trade in 2017, as you can see, that U.S. goods deficit within China is about $375 billion. Okay, so and our deficit is that with electronics and computers, we have $167 billion. Okay, that are basically we're doing business with them. And for us, if we look at our exports and what we actually give to them, it's bare to none, right? We have forestry products, minerals, and waste and scraps, oil and gas, transportation equipment, and farms and crops, right? But if we look at the difference, I mean, if you guys, it's outstanding. We need them to be able to sustain our economy. We need them just to be, because we have a lot of companies, which I mean, a lot of companies that export or they do a lot of their manufacturing overseas because it's obviously less cost productive and so forth, right? So they know that they can make a lot more profit for their shareholders, for the CEOs, and to be able to stabilize and to keep their business prosperous and so forth. So that being said, it's a lot different when we have the availability. Price is not really working. Sometimes price is not aware of where we're going or people aren't aware of price, on the way we're heading, right? We could have a surplus economy and we could have a exponential growth for many times, right? And then out of nowhere we have a correction where a lot of people get scared and they start to hold their money, right? They stop the speculation investors, and the BA accounts is the Better of Economics accounts, right? The Bureau of Economics accounts, right? That's the majority of how all the base fundamental analysis is distributed off really 7 or 8 key faculties on the monetary policy and how they distribute those key percentage gains, right? So Forex Factory is a huge one when we're able to understand. It's a news. You guys can look at forexfactoryinvestment.com. These are the two that I use, and they go over the specifics on how market price is going, where it's heading, and how it's overall proceeding in the markets. Okay, so like for instance, like since we see that obviously the GDP and just the gross domestic product and how we're able to not even be able to have close to what we provide for China to what they provide for us, we also have something. We have military. We have the dollar, right, which is the highest. But coming into fruition, the China renminbi. Excuse me, I always say that wrong. I know I need to pronounce that right in the future. Is basically I call it the REM. So it is going to be the highest currency value in the near future. As you guys know, that after 2008, China and Russia had a meeting saying that they are going to be able to start their own currency due to the inflation, or China was going to do their own currency due to inflation with the US dollar. So they predicted our economic scale. They predicted that we were going to have price in dollar, overinflated prices, and not learning from my last mistakes, right? Over the subprime loan crash in 2008, and also other adversaries and instruments had a part of that, but a big of it was about the home market, the crash of the home market. That being said, when we're seeing these different elements, these different faculties come into fruition, then we have to take into consideration that we're not going to have a sustainable growth, right? Because a lot of things, because like when I went to China, for instance, like, and I'm just speaking of, from personally going to Shanghai and being there for a couple weeks, I saw that, the living standards, right, are a lot different, right? So I see that a lot of people are happy with less, right? A lot of people are happy with little, and they're very happy still, right? In America, I'm not saying that all of us are that way, but we always have to have something. We have to consume. We have to always be having something more to be able to sustain a happiness, right? That instant gratification or that stabilizing of happiness, right? So it takes into consideration all of these things, right? Because consuming has to do with personal values, right? Personal beliefs. So their belief system's a little different than ours. They have a different foundation, different structure. So that being said, a lot of these things are going to be different in the long term. So they're happy with less. So if they were to go into a recession or a depression, they are going to be able to get out of it or be able to sustain their mental aspect better than we are, right? When we go into a deficit, we start, robbing, stealing, doing all types of non-ethical things, right? People start to just get into that fear mode, and then they start to just do things outside of their character. And that is what causes a lot of people to, lose a lot of wealth or money, or, the economy starts to tremble, right? Because it's usually the middle class that's keeping these things going, right? The upper class is kind of just taking the money. The middle class is more so like the oil in the machine, oil to keep the machine going, right? And then we have the poverty line, which obviously we help support. So like, for instance, like we have these different scales, what I've seen and over the years is that it keeps getting lower and lower, right? The middle class keeps on shrinking, the poor keeps on getting larger, and the rich keep on getting bigger, right? So we're starting to have that lower, the middle class, which is the oil for our economy, is starting to squeeze and squeeze and squeeze. So then we're not going to have a sustainable economy, meaning that we're not going to have a sustainable dollar, meaning we're going to have to go to another cycle and another different faculties, right? So that's another reason why that they're not going to be hiking interest rates. So if you guys look at past historical data, so I'm just going to go into this before I just move a little forward. So hopefully you guys are enjoying this. So if you guys have any comments, feel free to put into the comment section as well. I'll answer any of your guys' comments. So in 2017, the U.S. posted a $375 billion deficit in goods with China. Most glaringly is huge deficit in computers and electronics, as we know, Apple, Dell, you name it, Microsoft. I mean, all of our majority of products are made out of, I have a Logitech, and if I were to look at the back of it, it would probably say made in China. But actually, I think Logitech is actually made in Europe, but I'm not for sure. But a lot being said is that the U.S. posted $375.6 billion deficit in the goods in China, right? So we already established $1 trillion deficit. And if you guys know that a deficit is exposure for our economy, right? When we're exposed to having a lot of deficit, a lot of debt, our economy can't be able to sustain itself. So that's why we have to have price and value and have to have increasing of pushing money into the market. That's why a lot of these things called, if you guys called it easy money policy, which Europe was doing for a while, which China was doing. Easy money policies, meaning that they have zero interest rates, meaning that they use that to stimulate their economy. It's something that they use for people, as used for countries that need to have a stimulation faculty or simulation progression to move their economy upwards. So that's just a keynote. So back into this, what happens next? So Trump has vowed to increase tariffs. China relates because China's Trump's a businessman, but the Chinese likes to obviously get his side. But the Chinese promised to return the favor. A trade dispute between the two largest economies in the world could result in lasting damage to the global economy in measurements, right? So this is right in the middle of a second quarter. So this is this analysis I was doing last year as well. So you guys, so when I was doing this is brand new. So we didn't see such a huge effect with the US dollar. So moving into understanding where price is going into the next paradigm, I like to call it, you probably won't see any of this play until like September, because if you guys can always know where huge events that are going to be taken into consideration are always during interest spikes, right? So we already talked. I did some research, and they're not really in the Federal Reserve, the central bank, whatever you want to call it. Is not really looking to spike rates until September, right? So September is that four month reversal, right? So if we go into price, I'll show you guys exactly what I mean. So in September, we had this 4 month. Usually there's like a 4 month area where price just drives one way for like around 4 months, right? So if we go into September, and we can see here is September of last year. So if we were to show you guys where price started here, this is September, and then we'll see December, right? So price was driving for about, I mean, if we go into, let's say, first, right? So price for about 4 months, right, was driving, and I have the Bollinger Bands because I was just looking at some different trading styles and stuff like that, you guys. So bear with me on this as well. So as you can see, price validation was going into one area and is moving higher and higher. Okay, so we can see that price was moving up and down, making that M formation, and then consolidating, making that 3-level angular support, right? So then we have that pennant, right? So then breaks that angle, or that symmetrical triangle, breaks that triangle, and then now we make lows, right? But that being said, starting in September, so previously, I mean, the market was already bullish in March, right? We're already in a bullish market. It's been bullish basically all year. We had a bullish dollar. And then, like I said, you guys, what takes super quickly to go up, or a long time to go up, will come back a quarter of the time. So as you guys can see that March, all traders that were trading in this position, this area going long since the beginning of last year, March, literally in 1 month was stopped out with just this run, right? So that's what we talk about market manipulation. That's why people need to understand that this market is ran by institutions. It's not run by us day traders or speculation investors or swing traders. It's ran by 92% of the volume is ran by institutions. So literally March, April, May, June, July, August, September, October, November, December, right? So literally more than 3/4 of the year it took to reach this price of 1450 to be exact, right? Which is a psychological level, which is huge, you guys. Market always plays in psychological levels, right? 14,500 was a huge factor, right? Then we had price break this area, right? This consolidation area that was trapped liquidity for about November until late December, right? And then we had this, basically this 17-day drive of market stop hunt that took back the profits of all these traders that had trailing stop losses. I mean, there is thousands, millions of trailing stop orders in this area, you guys. Like all across this area are people's trailing stops, right? Then people were obviously getting out of this area probably around here if you're a smart trader. But then a lot of people were trying to, you know, think they're going to get rich off this one trade. So what happens was that price then reversed, and then that's what that spike comes into. We talked about those 250 pip intervals. Last week we talked about those 250 pip intervals. Essentially all it was trying to do was spike out all the trailing stops that were previously in the market higher, and then they're going to consolidate price one more time to retest these lows, right? That's what happens. So that's why when we're talking about the tariff agreements, this is just propaganda and illusion, smoke and mirrors to try to correlate and affect the psyche of your mind to create these stigmas that are going to release these, right, these cortisone, right? So it's just going to have your fight or flight measure. And when you're in fight or flight, you're not able to make the right decisions, right? That's why you're never supposed to go to the grocery store when you're hungry. That's why you're not supposed to argue with your girlfriend when you're mad, right? You don't want to say things that obviously you don't mean, but we say things because we're out of fight or flight, right? Our animalistic, right, part of our body, right? I'll get back into the neuroscience later on. But long story short, it's very important for us to not be so caught up in the propaganda. And I'm not essentially calling this as propaganda. This is actual factual things that are happening. But I mean, come on, you guys. The tariff agreements had nothing to do with this huge spike to the downside. I mean, that's just market working how it is. That's just how it's always worked. That's just the market doing what it loves to do, which is stopping traders out, moving price to the upside, consolidating and breaking out, right? We talk about this in all of our videos. So, that being said, we don't want to be so hugely impacted by these news as with we want to be more look at it like, okay, where are the signals out of this, right? There's always bits and pieces of what they're trying to tell you within the news and stuff like that. You just have to be very consciously aware of it, right? So consciously, you just got to be really connected to whatever paradigm your belief patterns are. So if that is you being a prosperous trader, you'll be able to integrate that with like, okay, tariff agreement. So tariff agreement's not until September, spikes not until September. Okay, that's when probably things are going to start to happen. Understanding those situations, because then you'll be like, okay, I'm not going to really worry about that right now. Let me get back into where price is right now. Let me not take that. I put that in a sticky note. Like I have this book that I write these things down, and then when time comes, I will come back to it later, and then I will be able to elaborate on it. Just like this tariff agreements I made in December, a couple days for my birthday. I did this total tariff agreement. I was doing this analysis for this tariff agreement. Still working on it right now. But it was basically just giving me a understanding of what's going on, just like the Brexit ordeal, right? We talked about the Brexit ordeal, didn't I? Remember when we talked about previously how I said that Brexit thing with the trade, with the vote coming into fruition, how that was smoke and mirrors, and how that price isn't going to drop, it's going to reverse. I mean, look what it did, you guys. Price literally then reversed, right? So that's what I'm trying to say is that we don't want to take a lot of this stuff into, understanding it is very important. It's very important as well. But at the same time, like we also have to be aware of the circumstances, be aware of what the market is really doing, right? So for instance, right here is when we're talking about, this is December, right? So we were talking about if prices go into reverse and keep breaking down. We had this huge conversation between if market price is going to move lower and retest the September lows of the spike. And then I was telling you guys that no, this is just basically a market reversal. This is just induce your selling positions to trap, right? Because always during the low of the markets, and guess what, guys? Guess what price ends up again? 112,500, another psychological level. So I'm not making this stuff up. So like, price will be valued, and then they will bring these news events out to stir up your emotions, right? Emotions, energy, and motion, to then energetically change your actions based off your energetic vibration on what you believe is true or not, right? Your belief system. Everything comes down to what you believe. That's what you will manifest into your reality. It's proven by many of the best philanthropists, investors, entrepreneurs, inventors. Nikola Tesla, I love Nikola Tesla, one of my favorite scientists. He talks all about this, you guys. So like, if you are not so caught up on the illusions, or not the really illusions, but the smoke and mirrors that are coming around, because around this area is everybody's like, oh, the first Brexit deal didn't go through, and then everybody, and then that huge spike to the downside, and then everybody's like, oh wow, they're gonna break even lower, right? Because look at all this was before this candle went bullish, right? Because it's easy to predict price after price has been created, but like if you start to like understand this over and over again, then you understand that we predicted that it was going to go long, like earlier, like in December we predicted it. Like if we go to the Discord, if you guys go to the signals, and if you guys go to my back videos, we talked about this. We talked about Brexit. This Brexit ordeal isn't really going to be a huge determining factor. Like we are still going to be going long for the Great Britain pound for this year. I mean, we still have all of these areas to hit for these trailing stop losses. I mean, there's so many trailing stop losses down here that it would be ridiculous for it. It could probably have a spike to the downside before it goes up, which is a possibility. We're definitely going to take everything into consideration. But what I say, if price is going to reverse, go to the downside, there's not a lot of liquidity trapped here. I mean, there's more liquidity trapped up here than there is down there. And we're going into a new cycle, right? This is the last day of the market, right, of the lunar cycle, right? There's 28 days in the lunar cycle. Lunar markets or lunar momentum comes off the stock market as well. And I'll go into that video actually sometime this week. I'm going to show you guys how the lunar cycles play effect with the market as well. And you guys are going to be like, whoa, that's crazy. But I'm telling you, it's really important stuff. And I'd say I was kind of up all night studying that as well. So sorry if I look a little tired, you guys. Still really excited about just the markets itself, just in general. Like it just, if you guys look at this crossover, right? The moving average crossover is happening right here. We have with the shift bar right here with the bullish shift bar, which is a huge factual aspect of where market price is going to be moving to the upside. So that being said, we're not going to be seeing a lot of downwards, right? As you guys can see, even gold is still obviously going to probably have retracement to the downside. It could have a nice move to the upside still. We're possibly going to even still see price move up to the highs, right? It's going to have to have a line drive before it starts to consolidate, because price isn't going to just be able to go all the way up in this area. It might have a downward spike before it goes up, but we're going to take all this into consideration, right? So going back into the China's the tariff agreements, okay? So moving back into this, we're not really going to have such a huge impactful effect right now, you guys. That was just like my end aspect of this right now. We're not going to have something. If anything, we're going to take into consideration is the analogy, or not the analogy, the understanding of the deficit, right? The deficit is everything, right? $1 trillion deficit since 2012, $375 billion deficit with goods. The deficit. Forget about China for right now. Just think about just the deficit of debt we have as a U.S. economy, right? Or if you're in U.S., people in the United States. We are going into a recession if we're not already going into a recession. This is essentially just a part of the cycle, right? Cycle of the monetary policies, like cycle of the economy, right? We go up for 7 years, we have a cycle, and we go down, right? And that's just how essentially we have it. That's why if you guys see the interest spikes, right? We're at 5% interest spikes before we went to a recession, right? We're at 5%. Then in 2008. Now we're at 2.5%, right? With Treasury bonds not able to increase, right? It's crazy how we had a 3% Treasury bond validation, but then we were in a surplus economy. So he said, right? We had record-breaking stock prices, record-breaking home sales. We had the highest equities. House equity since 2009 or 2007, which I should know that. It shouldn't be like, it was 2007. So like we've had these increase, but then if that is into consideration, what is wrong with the Treasury bond? Why is the Treasury bond looking the way it is, right? Why are we still not having? I mean, this is what happened, guys. 2017, right? 2016, Donald Trump was elected, right? Boom. Treasury bond spiked to the high, right? Now we're having this huge formation. This is just a inverse head and shoulders, or a head and shoulders, you guys. It's literally just a head and shoulders on a weekly chart. If we're looking at this right now, look at it. First head, right? Election, perfect. First spike, right? Priced in value, right? The runner, okay? Right? Price in value, the runner established. After the price and value of the runner was established, then you have the peak, right? The peak was established. That new paradigm, right? After we have the new paradigm, we're going to have a slump to the downside to then retrace to the lows, right? It's just the cycle of what we do, okay? So this is where a lot of people, even if say that I put in, so that's what I'm trying to say is, you guys, is that like we are having, this is 10-year Treasury bond. If you guys don't know, 10-year Treasury yield or Treasury bond has a huge impact on what the dollar is going to do. High Treasury bond, high dollar. Low Treasury bond, low dollar. To an extent, right? If you have a price in value with the deficit the way we do, it's inflated, right? Inflation decreases the value of the dollar, which then the determining factor of the Treasury is based off just the percentage the government is giving you. It's not the percentage of what the economy stimulation or the economy's act right now, because the economy is just being priced in. It's a priced in valued increase, everything that's being given to the economy right now, like the higher sales and so forth, everything has been generating the last couple of years since Donald Trump was elected, was based off IOUs and price in value, right? So that's why we had such a huge spike, right? To the upside. Like, look at this spike, guys. This is huge. Like, these are huge spikes. Then when we get back into the neutral zone, when things aren't as sustainable, then we're going to have that correction, right? And the correction has to come to fruition because nothing can go forever, right? A runner can't sprint forever. He has to pace himself. But the thing is that when you don't pace yourself, you then start to collapse, right? So that's the thing where we're having a correction to the downside. So then we're going to know that we can take into consideration this can be a value again. So the treasury bond's going down, so we can look at the dollar going down, right? So moving forward, I can see what they're talking about, right? Not until September, because if we're gonna go in September, we're probably gonna be at like these lows right here in September. Then once we have September established, we're going to increase spikes, going to increase interest rates, and guess what's going to happen? Then we're going to move up higher, right? That's why I don't really take in consideration these spikes to the upside. I don't take into consideration these, these interest rates until they are all correlated 1 to 1 to 1, right? Just like a trading program or a trading strategy, right? You're not just looking for one segment to get in. You're looking for multiple things that add up together that are showing validation, because that's what most speculation investors do. We look for validation on 3 to 4 edges, or we have an edge over the market, but it's a very small edge that we know that there's these determining factors and these percentages that the market likes to move. So we use our edge for our advancing in our prosperous career, right? So that is what the market analysis, I believe, is probably a high probability of what market price is going to be going into the near future, with the US dollar, with the China's tariff agreements, with the deficit of our economy, and moving forward with that. So I've mapped out something for you guys on Bitcoin. I'm just going to go over Bitcoin before I end today's live stream. So Bitcoin is right now going into a bear hunt, right? So a bear hunt is basically that we had this consolidation for a very long time, right? Then we're going to trap these sellers right here that are basically in the market selling. A lot of these people are selling in the market right now. We're going to have that retracement to the high. I'm looking to take profit at that 5,500 area, right? 5,500 is where the market broke. What does the market like to do? Break and retest. So I want to see that nice area come back into the near future, making that peak formation or that U formation, right? And it could have something like a cup and handle, right? A cup and handle could come back down and then move to the downside and then up if you want to. But we're not going to take that. We're not going to go too much into it. But this is what my hypothesis, is what I believe is going on right now. Or move up higher. As we can see, prices starting to move to the upside. We're definitely not going to see too much market value price go up. We had that whipsaw pattern, where that whipsaw pattern means that consolidation. Whipsaw is basically when price consolidates, hit your stops at the high, comes back, moves price, and then shoots price higher. So that's another thing that we're going to talk about is formations, definitely in the smaller for the lost scalpers. You guys are scalping the market. So we can see Ethereum's doing a lot of the same stuff as well. See that breakout right here. See that shift bar coming up out of there. So we're going to start to possibly see a reversal here. You can already see XRP, BTC. You can already see the market is moving to the higher momentum now. I took this trade just a little earlier yesterday, got stopped out here, but as you guys see, market price is already spiking up higher. So we're definitely going to be looking up to that reversal in the near future. We are still long Euro USD right now. We're going to look for that retracement to the downside and then have that push to the upside. And then for market price down here, we possibly are seeing that swing low to a swing high one more time to the downside, and this is possibly where market price is going to be moving in the near future. So that being said, you guys, hope you guys enjoyed today's live stream. I'm going to be doing a market health update later on today after prices moved a little more. Usually I like to do it between end of Tokyo session going into Sydney session, because then I get this perception of where price is going to be moving in the near future. Average daily range, I'm going to try to do a link to that on most pairs, so you'll have that available. I tried to do that, but it was just too long in the Discord. It just looked tacky, so I'm going to put a link to that, so you guys have a link to the average daily range. And I hope you guys enjoyed today, and I will see you guys tomorrow. Have a great rest of your day, and take care.